Welcome back, friends, to Alpha Beta Soup. I'm TXMC. Well, there's some major events unfolding on the world stage that I want to talk about later in this video. But what we'll do first is explore the Bitcoin price chart. We'll look at some of the major indexes. We'll even take a peek at Ethereum, which we almost never do. And I'll lay out for you some of the low-key constructive developments I see on the charts. There are some things to be positive about. And then later we'll explore what I mentioned that's going on the global stage and what I think it means for Bitcoin moving forward. So we've got a few things to talk about, and I'm excited to get into it. If you enjoy my content, make sure to give this video a thumbs up and subscribe to my channel. I couldn't do this without you guys, and I appreciate all of your support. So let's get into it. Well, Bitcoin, for its part, is still pretty much where we left it. But it does seem that there are some constructive developments happening here. If we go down to the lower time frames and I zoom out a bit, we can see that structurally we're setting higher lows, right? This particular pump, if you want to call it, move to the upside from the recent lows is a bit different from the last few times this has happened. If we zoom out here, and we can see a lot of the recent pumps. Let me get my drawing tool here. This move right here, this pump, and even this larger one, all of these were catalyzed by really sharp upward moves. And you can see all three of these pumps ran out of steam, either a few hours or a few days later. But what we're seeing structurally over here that's got me a little confident, it's got me feeling a little better, is that we're setting higher lows. Every time we come back down to test, we're still setting higher lows. And so I'm liking this look. We're yet to set a higher high on the daily chart. If we zoom out here and we look on the daily chart, we're still a ways from setting a higher high, which would be up here. But we've got some positive developments. We've at least got a constructive price structure developing here on the low time frames. But obviously, if we stay zoomed out here, it's pretty clear that we are well within a range. And as we explored, I believe in the previous video, we've got kind of a no man's land for price here between 45 and 46,000. So regardless of what's happening on the lower time frames, we do still need to get up here, find a bounce, and then move higher before we can say we've cleared this area. Still a lot of work to be done, several more $1,000s of price to climb through. But on the subject of higher highs on the daily time frame, if we look over here at Ethereum, which I don't look at very often, we can see that it recently made a higher high on its own daily chart. So we can see one of the other larger cryptos is at least breaking out of its downtrend pattern that it's been in for multiple months. Will it hold? Is that a sign that the market is starting to turn around? I don't know. I can't say that Ethereum is going to lead the pack, but I did observe that it made a higher high on the daily here. So I thought it'd be worth pointing out. And if we look at the three major indices compared to Bitcoin, the S&P 500, the NASDAQ, and the Dow Jones, all of them are very close to setting higher highs on their own daily charts. Each of them are within a percentage point or so of setting one. The NASDAQ is actually about closer to 3%, but both the S&P and the Dow are very close to higher highs. And if either of them see a rally similar to what they've experienced the last two market sessions, they will set that today or the next day. So this does feel like a positive development. It's nice to see a bit of sustained upside where the majority of these rallies have been a single day pump and then immediately rejected. I mean, just look at the disparity of red candles to green candles here. So this is what I'll be watching in traditional finance today. I want to see if these indices set higher highs on their dailies and if they continue these rallies. If we glance at the futures markets for each of these symbols, it does look like there's a little bit of weakness before we get to the open. Right now, we're about an hour out from the open of the US session. So we'll keep an eye on it, something to watch today. Now, digging a little deeper into Bitcoin itself, down here at the bottom, we're looking at the Perpetual futures basis. This is the comparison of all of the futures indexes, all the futures prices, to the spot price, which I use Coinbase as my index for. Coinbase is the largest North American exchange. It has high volume, and it's what we can use as a reliable spot index for comparison. And what you can see down here on my indicator is a sustained negative basis, which means that the futures instruments, which you can see listed over here, FTX, Bybit, Binance, etc., all of these futures instruments are trading below the spot price. And that can happen in a couple of ways. I'll leave a link in the description below to a video a few weeks ago where I deep dived how to interpret the futures perpetual basis. But the TLDR is that when you have a sustained negative basis, a sustained discount regime, it means that the futures price is following behind the spot price. It means that Coinbase has a higher price. You can see over here, it's $15 to $40 as these ticks bounce around. And the reason I'm watching this is because if you look back here during the bull run, you can see a sustained period of positive basis. This is a premium regime. And this happens when the futures market becomes more aggressive than the spot market while price is moving up. And we are still well into our discount regime that we began back here in December when we had our major liquidation event. We began a discount regime on this day, and it has sustained since. It's tried to get back into the positive a couple of times, but hasn't been able to maintain it. And this will be one of the signals I start to watch as price creeps back up towards 50K. I don't know if we're going to do that right here. As we explored, we are seeing higher lows. That is constructive from a price structure perspective. There's still a lot of work to be done, and there's still a lot of downside resistance. One thing I do want to touch on is the flow in and out of exchanges during this time. I may have mentioned this in a previous video, but I think it's worth touching on. And what this chart is showing is the 90-day flow of Bitcoin in and out of exchanges. Positive values mean inflows, negative values mean outflows, withdrawals from exchange. Now, the color itself is actually based on the 90-day change of price, not of exchange flows. So I did that so you can visualize how exchanges are behaving in relation to what price has been doing. You can see in May, June, and July, as we've explored numerous times on this channel, there was a large influx, a major deposit of Bitcoin to all of the exchanges that lasted for a few months here in the middle of last year. And it occurred during several months of downward price action, and it fits the coloration of the price itself almost perfectly. Look at this. Blue, price is going up, exchanges seeing withdrawals. Red, price is going down, we're seeing deposits. And then it changes almost at the same time that the color changes. But if you look now at the recent time, exchange flows are far more mixed. Now, if I put my drawing tools on here, what I think is pretty interesting is that there's almost like a downward trend to these exchange flows here. And that's the polar opposite of what we were seeing back here. So I find this dynamic pretty interesting. You can see by the red color that price has been largely negative for the last few months. We're very well aware of that. But we're not seeing a bunch of customers depositing their Bitcoin onto exchanges with the intent of selling them. They're just kind of sitting still on their current holdings. So this does show a bit of robustness in the market based purely on this one metric. I don't give a ton of weight to exchange flows and their impact on price, but I do find it interesting to observe the trend. So this last screen we'll look at together is from Trading Light, and I know it switches to dark here. Hopefully that doesn't hurt your eyes too much. And the reason I want to bring this up, so Trading Light, this tool here, is used by active traders predominantly. It's a way to visualize the order books, and it's a very powerful tool. And what we're looking at right here is Coinbase. Coinbase from March of 2020, which is right here, all the way up into recent times. You can see the price action behind this heat map that I've got drawn on the screen. You know what? I can even turn this heat map off in case that's harder to see. There we go. So this is the price action, right? But the thing I really want to look at is not the heat map that I just turned off, but I want to look down here. Now, this indicator at the bottom was written by a buddy of mine, D7R. He writes a lot of really great indicators, both on TradingView and here on Trading Light. So if you look for his name on TradingView, you'll find some of his work. Very smart guy. And this indicator is showing the sum of bids and asks in the order books. An ask is someone offering to sell their asset at a given price, and a bid is the opposite. What I really want to zoom in on down here are these different regimes of the bid and asks. Now, if you look at my yellow boxes, right, these two yellow boxes right here, they're both periods of the market. I could even probably extend this one to here, where the number of asks which are in the red line, are equal to or surpassing the number of bids, meaning that the number of sell orders are roughly equivalent or surpassing the number of buy orders. That's the layman's way to think of it. And if you'll notice, this period comes in basically after the bull run. We've talked about on this channel before how this period right here was really the height of the market. We ripped up from the previous all-time high at 20K up to 40. We had a quality pullback here, and there was a ton of market activity at this moment. Curiously, that is also where this regime of bids far outnumbering asks started to come to a close. Additionally, where this regime started to turn around was after the sell-off in May, right? You can see, look, they immediately flip, and then we spend several months with bids far outpacing the asks. And then where does it start to reverse? Take it up? The all-time high. Well, isn't that curious? And then where does that same regime come to an end? Right on the liquidation. So what we've really boxed out here, I know I've got a lot of messy drawing on here, but what we have basically identified is that the number of bids and asks on Coinbase, remember, this is the US spot market. This is not derivatives traders. This is not futures. These are people buying physical Bitcoin in North America. And what we've identified is that periods where the number of bidders gets overrun by the number of sellers tend to happen near the market tops. These regimes kicked in at all-time highs, and they ended when we left the highs. Now, we are in one of those periods now. If you look down here, you can see the upward slant of bids. The amount of bidding is growing, and it's outpacing the number of asks. We can see these periods can go on for a long time. They can go on for several months, and they don't always have to preclude immediate price going up, right? Just look at this dynamic right here. It's building, yet price is continuing to go sideways. It's building while price continues to go sideways. Same dynamic. What I could probably take from this is that we're setting up for another rally. It could mean that, just based solely on our interpretation of this bid and ask indicator here. Now, we know there's a lot of macro headwinds. There's a lot of other things going on out there that will have their say in the market. But looking at this, looking at the health of the order books exclusively, it does appear that bidders are outpacing the sellers. And looking back just in the last 2 years, that has been a positive for price. I mean, the entire 2020 bull run took place during one of these regimes, and both of the tops of the markets came in during the opposite. So that's currently feeding into my base case, and I want to hat tip my homie D7R for pointing this out to me, because he's the one who brought this to my attention, and I think it's a great insight. So to bring it back, here, I'm switching back to a bright screen. Sorry if that hurts your eyes, but my trading light theme is only dark version at this time. I'll try to make it a lighter version the next time we look at it. But what I want to mention as my kind of final thought here, we explored that exchange balances are pretty flat during this time, so we're not seeing a rush to the exits. We've explored a possible constructive price action here on the lower time frames for Bitcoin, but it's still far too early to get excited about it, as we know we're still in a very stout range of accumulation. We're also looking to see major indexes ultimately put in higher highs on their daily charts, because that's the first step to this rally having legs, and that's what I'll be looking for today and tomorrow. But something else that's going on in money broadly, in the geopolitical space, is got my gears turning. And I think that a lot of people are yet to understand its true implications. And it stems from this tweet that I posted yesterday that announced that Saudi Arabia and China are in talks to conduct oil sales in yuan. Now, for many people, this headline just rolled past like many others. But this is something of major global significance, in my opinion, and it's related to the petrodollar. Now, what is the petrodollar? Well, let's go back to the 70s. In 1971, Richard Nixon ended gold convertibility. You could no longer trade in US dollars for gold at the Federal Reserve. And by doing that, he ended the US dollar's backing by gold and essentially made it a fiat currency. He ushered in the era of fiat. And at that time, in the wake of World War II, the world had been operating under the Bretton Woods Agreement, wherein gold would be pegged to $35 an ounce. The US would provide convertibility to its allies in exchange for holding their gold stores in the federal banks. But over the decades after World War II, as it became harder and harder to maintain the gold peg in the wake of government spending, various allies began requesting their gold out of our vaults. And it got so bad that Nixon decided to end the gold convertibility. Now, what that did just a few years later was opened the door for what is known as the petrodollar system. The petrodollar system is an agreement between the United States and the world's major oil producers of the mid-1970s, predominantly Saudi Arabia. And what they agreed to do was sell oil to the rest of the world in exclusively US dollars. And what that did was created a global reserve currency. Now, when you have an agreed upon single unit of exchange across the entire world, it speeds up commerce. Right? It's a greasing of the skids of global economics. And in a way, it helped push the major globalization we saw from the 70s into the 2000s. Nations needing to buy oil to run their economies started conducting other trade in US dollars and holding US treasuries in reserve. This agreement allowed the U.S. to run major account deficits with the rest of the world because it was providing dollars for global commerce. And in exchange, the U.S. got to spend almost indiscriminately. But in the last few years, demand for U.S. treasuries has begun to wane. It exploded in the middle 2000s, and in the last few years, we've seen declines, and there have been some nations that have begun to de-dollarize. In 2018, Russia got rid of the vast majority of its U.S. treasuries. China, which was the largest buyer of U.S. debt for many years, has cut tremendously back on the amount of debt they purchase. We're seeing demand for U.S. dollars start to wane. And part of that has to do with the dissolving of buying power of these other nations. They're seeing inflation running rampant, and the traditional agreements are not as beneficial as they once were. It leads to conflict. It leads to grumbling. And what we saw now with Saudi Arabia, who was one of the linchpins of the original petrodollar system that has governed the world for the last 50 years, when we see them now talking about selling oil in other currencies to other nations, they have essentially abandoned the old agreement. The petrodollar is officially dead. And the reason that that is important, friends, is because the petrodollar is the reason. It is the reason that the United States was able to maintain such a spending deficit for so long. This will force the United States to rein in its own spending, or it will drive the dollar into death by hyperinflation and rampant excess government spending, trying to protect an economy that is weakening. There aren't a lot of great outcomes for the US dollar here, but that doesn't necessarily mean they are bad outcomes for America or for the world, but it does mean we're in a period of heavy transformation. I think historians will look back on this time of human history and marvel at how many pieces were moving on the board at the same time. We've got Saudi Arabia in talks with China to sell oil in yuan. We've got Russia talking to India about having a rupee agreement to sell resources amongst themselves. This comes on the back of the world seeing Russia, one of the largest energy producers on Earth, getting locked out of hundreds of billions of dollars in foreign exchange reserves that it thought belonged to them. They thought it was their money. But what they have come to learn is that that money only belongs to them as long as they're in agreement with the nation who runs the monetary network. Well, the US dollar and the euro are run by the United States and the European Union, neither of which are very friendly to Russia right now. So what did they decide to do? Lock them out of their money. This is a brilliant advertisement for taking sovereign custody of your wealth whenever possible. And I believe that both gold and Bitcoin stand to benefit greatly from the machinations that we see unfolding on the world stage. Having a store of value unit like Bitcoin or like gold that cannot be censored, that cannot be controlled by another sovereign, that cannot lock you out of using it, that has major appeal now, especially as we're seeing the unwinding of the traditional financial system. Old agreements are being thrown out. And I think that a few years from now, we may look up and see Bitcoin considerably higher in price and larger in scale than it is now, because it was built precisely for these use cases. So we've got a lot of negativity going on. There's a lot of concern that maybe we're heading towards a recession. There's a lot of fear about inflation becoming embedded and staying elevated for many, many more months. And I think that all of those things are valid and possible. But if we're looking long-term, big picture scale, the upending of the old petrodollar system might be painful in the short term as the world figures out new agreements and new arrangements. But long term, I expect this to be one of the major catalysts in long-term Bitcoin adoption globally, and I'm very excited about it. Okay, that's what I had on my mind today. I threw a lot at you guys, gave you a lot to think about. Make sure you leave any questions or feedback for me in the comments down below, and I'd be happy to read through them. There are some low-key positive developments unfolding in the charts as we explored today, but because of the geopolitical landscape, it's not time to ring the bullish bell just yet. So we're still waiting and seeing. But I do think that bigger picture, some of these changes we're undergoing on the global stage will be net positives for Bitcoin long term. And I'm very excited to see what the future holds because the current environment is exactly the kind of thing that Bitcoin was designed for. It's just that the rest of the world hasn't woken up to it yet, but I think they will. But all right, that's enough about that. Make sure you're following me here on Twitter at TXMC Trades. This is the only place to get in contact with me. Beware of fakers. I don't have an email list. I don't ask you about your portfolio. I only release content on my YouTube channel or announced through my Twitter page right here. So be sure to follow me. And that's it. That's all we've got to talk about today. Make sure you take care of yourselves, friends, first and foremost. Take care of your families. Be kind to one another. And we will talk again very soon. Cheers.